So Ben, a lot of times I have clients who, when I say, hey, let's reach out to, one of my buddies who's a lender, they get kind of scared. Oh, I don't want my credit pulled.
Right.
Can you help with
Yeah,
that?
no, it's a good question. Yeah, people commonly ask that. So we do a soft credit pull, so it doesn't cost you any money and it doesn't cost you any points off of your score. It's just one of the 3 bureaus and allows us to see all the information that we need to figure out all the math that we need to know to calculate debt to income ratio and what you qualify for. So a soft pull is an easy way for us to get those things that we need to help you the most without affecting you.
And how long does that take?
It's just 20, 30 seconds.
Let's say someone's been renting for a couple years and rent keeps going up each year. You know, $50 here, $150 the next year.
Right.
Does that ever happen with a home loan?
Yeah, so with a home loan, you hear a lot about a fixed mortgage. Fixed mortgage means that your interest rate is fixed for the life of the loan as long as you have it or until it's paid off.
Okay.
So your principal and interest never changes.
Okay.
There are other parts of the loan that could and do change. Taxes, property taxes, and insurance, homeowner's insurance. If your homeowner's insurance goes up, then your monthly mortgage payment is going to go up.
Okay.
If your property taxes go up, which of course is going to happen, you want that to happen on one level because it means the value of your house is going up. We don't want it to go up too much because then you're paying, too much.
Yeah.
But as those things change, yes, your mortgage payment will change over time due to property taxes and homeowner's insurance.
But as far as the home loan goes,
correct,
that does not change.
Fixed interest means principal and interest is fixed for the life.
Yeah, and if your interest rate goes to a point where, or your tax statement where you get that at the end of the year, this is what your home's worth. If it gets to a place where you're like, oh my gosh, this isn't right, this seems too much, that's when you contact me, your real estate agent. I will be able to run comps for you and let you know, hey, your home really is worth this much value.
Yeah.
Great job on your investment.
Yeah,
it kind of stinks sometimes,
Sure.
but great job on the investment. Or I can throw comps your way where we go and fight that and say, hey, this is actually the value of the home.
Right, that's right. We make a great team.
So Ben, what's the difference between getting pre-qualified and pre-approved?
Yeah, it's a good question. So generally speaking, pre-qualified means that you filled out an application, you've given them the proper information, income, details like that, maybe a document or two, but not everything.
Okay.
A pre-approval is all of your documents, including tax returns and W-2s and pay stubs and bank statements and photo ID and everything that would be necessary to submit the loan to the underwriter. And that's the difference between a pre-qual and a pre-approval. At that time, we would also pull credit.
So Ben, what's the benefit of going to you? You're at direct rate home loans. What's the benefit between going to you or going to my credit union or like a bigger national bank?
Right. Yeah. So it's kind of similar to it's the retail wholesale route.
Okay.
If you go to your bank or a company that does their own lending, you only have the options that they offer.
Okay.
If you go to a wholesaler or broker like what I do, we have a variety of different investors. We can shop around and find the lowest fees or the lowest rate or whatever it is most important to you. Some people are really particular about having their lender not sell their loan over and over and over. And so we can find somebody that services their own products. We can find somebody with the lowest fees, the lowest rate, whatever is the most important thing.
So you find out what's most important for your client and you make a loan that works for them.
Correct, that's right, with just lots of options to choose from.
Hey Ben, what credit score does someone need to buy a home?
Sure, so there's some general guidelines. Typically, FHA loan 580 is the minimum. With that being said, I just closed a refinance at 570 credit score. With the conventional loan, 620, 640, depending on the programs. If you can get yourself to 720, 740, you're gonna unlock and open up all the avenues and all the possibilities available for you. So there are some guidelines and there's exceptions to every one of those guidelines.
Follow-up question to that.
Sure.
Let's say I'm like at a 540 and I want to get to 570 and I have no idea what to do. Who do I talk to for that?
Yeah, you talk to me. We work with a credit coach, different between credit counseling and credit coach, but we can help you get to where you want to go.
How much do you charge for that?
So there's a couple different options. Generally speaking, the one that I use most often, I recommend because it does the best job. It costs $500.
Okay.
Just a one-time fee. There's no monthly obligation after that. You make an appointment once a month to meet with the credit coach to go over those goals that you're trying to reach, the modalities and methods that need to take place to get you to where you want to go. They do all of it for you. They just explain to you how it works. And it can be a 20-day process, a 60-day process, a 90-day process, depending on where you start and where you want to get to.
Cool. And in the long run, that $500 is going to end up saving you a lot
Yes,
of money.
100%. And not only just on your mortgage, but everything else in your life.
Hey Ben, what are some of the loans out there right now in Utah for first-time home buyers?
Yeah, a couple different options that I like to use. The big one that I use most often is called Utah Housing. It allows a first and a second mortgage. The second mortgage covers the whole down payment and a majority, if not all, of the closing costs.
Oh, wow.
Most people that I work with have to come in with between $2,000 and $3,000 to buy a house. And again, if realtors are working hard, like you do, and they get seller concessions, they don't even have to come up with that, or they can get it refunded at closing. There's a couple other programs that we do as well, just depending on the needs, the specific details of your application, and we go over all those different options with you.
Ben, you've been doing this a long time, and you've worked with a lot of first-time home buyers. What's the biggest mistake you see first-time home buyers do when trying to get a loan?
Yeah, so I don't know if there's one big mistake, but there's some common things that I see. I see people, I think they wait too long. They have questions that they don't ask. They think they know answers based off of one other person's experience or their parents' first-time experience, and they don't ask to find out what it is that applies to them. And so I think it's always good for first-time home buyers to have a list of questions, ask a lot of questions, and then to ask the famous question, is there anything else that I should ask that I haven't asked yet? Because there's a lot of things that are beneficial to know as a first-time home buyer, some that you're thinking about and some that you don't know. You don't have to have perfect credit. You don't have to have a ton of money saved. You do have to have good income. You do have to have 2 years of history, but steady income is good income. And those are easy conversations that first-time home buyers, if they would just reach out and ask, they would dispel a lot of their insecurities. They would dispel a lot of the angst that they have going into buying a house for the first time, because it is a big deal.
Ben, why should I talk to a local lender before I start looking at houses?
Yeah, a lot of different reasons. I think the main one, number one, you want to know what you qualify for. Nothing worse than shopping for a house that you fall in love with but you don't qualify for. The second thing is being discouraged, thinking you don't qualify for as much as you might. So I think starting off with a local lender is super important. Finding out where you are, where you want to be, and if that's where you are, then go. And if not, we'll help you get a plan to get there.
How long does it usually take to close a loan in Salt Lake County right now?
Yeah, so I think typically when a realtor writes up a contract, you write it for 30 days. That's just kind of the norm. Sometimes it takes longer. Sometimes you can go a little quicker. A lot of that depends on how fast we get documents from the client, how fast the turn time is with the underwriter. So there's a couple different variables, but for the most part, 30 days is pretty typical, pretty average. Our office is currently averaging 19 days to close a loan. I actually just had a closing today. We closed 9 days early.
Oh, wow.
Yeah.
Hey, Ben, how much money do I actually need for a down payment right now? Is it 20%?
Yeah, good question. So people commonly think that they need to bring 20% down to a purchase because they avoid mortgage insurance. That's what most of our parents taught us. That was kind of the old school way, if you will, of how to go about it. That's still true. There's still lots of benefits with 20% down. Minimum down payment for a first-time home buyer, 3% to 3.5%. 5% if you're using a conventional loan and you've already owned a home in the past. For down payment, that's generally speaking how it goes. We even have zero down options as well for first-time home buyers and things. So you can buy a house with no down payment. If your realtor's working hard for you, they're going to cover all your closing costs, and you can buy a house with almost no money out of your pocket.
So let's say I'm at family dinner. I have older siblings who bought houses 3-4 years ago, and they have interest rates of 3.5%.
Right.
And I want to get into a place. I'm seeing interest rates at hopefully 6%.
Sure.
Hopefully they'll go lower. And my siblings are saying, hey, don't buy, don't buy, don't buy. What are my options?
Yeah, I mean, everybody's answer to that question is going to be different. I think it kind of comes back to that old adage, when's the best time to plant a shade tree? Right, 20 years ago, when's the second best time? It's today, right?
Okay.
It's renting versus owning. The math is always better to own than it is to rent. It's 100% loss as opposed to, yeah, you're paying 6 or 7% interest rate, which is better than renting and paying somebody else's mortgage. If it's a primary residence, it's always a good time to buy a house.
Okay.
It's always a good time to buy a house. Home ownership increases in value over time. It's never a bad time to buy a primary residence. And you buy the house that you love, make sure that it's affordable, and then it can only get better from there with a refinance as rates drop potentially in the future.
So lately the market's changing a lot.
Sure.
What if I go under contract and the rates go down?
Yeah, good question. So we work with a lot of different investors. So there's a couple different options. One is we can negotiate with the investor that we currently have your loan with and see if they will lower the rates as the market is changing in your favor. The other option is because we work with so many different investors, we can take your loan to a different investor.
So even before I own the home, you can take it. So let's say I'm in an apartment, okay? And I see how much I'm paying for rent. I hear the interest rates just got cut by 0.25%. What's my next step?
So always reach out. It's never a bad time to reach out and ask questions. You might not be where you want to be now, but we can make a plan for you to get to where you want to be in the future. That's a pretty common question. That's a common mistake I think that people make too by waiting, but always reach out. There's no cost, there's no obligation. Find out exactly where you are, and if that's where you want to be, great. And if it's not, we can get a plan to get you to where you want to be.